Good day folks, this is Chris Ron again, checking in for the second technical video in this series. The first video we looked at the concept of when I'm away overnight, how long should I be away overnight and how far away from my normal place of residence and work I should be. Remember, in this video we'll look at the concept of when I claim a notional input tax deduction, on what value may I claim that deduction. Now the Act is very clear. It says in this instance it's always the lower of cost or market value. So if I buy a second-hand item and I pay more than the market value for that, then it's only on the cost or the market value of those goods. So let's assume I buy something for 100, it's only worth 80, I only get a notional input tax on 80, irrespective of whether there is a connected party relationship or not. Now in the motor industry, this creates a problem. Because often what happens in the motor industry, I get a trade in, but I need assistance to buy the new car. So what the trader says, listen, what I'll do is your car's only worth 100,000, but I'll give you 120,000. I'll be slap the 20,000 on top of the price of the new vehicle. So that means technically the motor trader will only get an input tax deduction on 100,000. But account for output tax on the additional amount that was added to the value of the motor car when it was sold, the new car. To overcome this, SARS have given a ruling saying that in that specific incidents, the VAT or the market value will be regarded as the amount which is paid for the motor vehicles. In this case, the market value of the motor vehicle is 100,000, but you've paid 120,000, so the motor dealer will get an input tax deduction, a notional input tax deduction on the 120,000. So that's an important exception to take note of in a specific industry. It does not apply across the board. Hope that makes sense. Again, this is Chris Ron checking out for TradeTaxPlus, Center of Excellence.